What if I told you that right now as we speak, over 2 million Americans have packed up and moved south, leaving cities like New York, Los Angeles, and Chicago in the dust? And here's the kicker. In places like Austin, Texas, home prices have jumped nearly 30% in just the past 18 months. Yet, investors from London, Sydney, and Toronto are still getting in because they see something most people are missing. I was on a call last week with Mark Ellis, a real estate strategist in Austin. He said to me, "We're seeing bidding wars on properties that didn't get a single offer 3 years ago. The demand isn't slowing down, it's accelerating." But here's the question. Is this the smartest investment opportunity of the decade? Or is it the next housing bubble waiting to burst? In this video, I'm breaking down exactly what's happening in the Sunbelt real estate market in 2025, where the real opportunities are, and how you can capitalize before it's too late. And take a look at this chart. Net domestic migration into Texas 2020 versus 2025. The numbers don't lie. Ready to dive in? Let's get started. The rise of the Sunbelt. Why? It's the new gold mine for property investors. So, why is everyone moving south? And more importantly, why are investors, especially the ones who used to pour millions into markets like New York, London, and Sydney, now shifting their focus to places like Austin, Miami, and Charlotte? The answer isn't just about cheaper houses and sunny weather. It's about a fundamental shift in demographics, economics, and lifestyle preferences that is reshaping where wealth is being created and where it's being parked. Let's break it down. Explosive population growth is driving demand. In 2024 alone, Texas added over 500,000 new residents, more than any other state in the U.S. Florida wasn't far behind, welcoming nearly 430,000. That's equivalent to the entire population of Miami moving into the state over the course of a year. Take a look at this chart. Population growth by state, 2023 versus 2025. Now you might be wondering, why does this matter to you as an investor? Simple. People need homes. And when demand outpaces supply, prices rise. I was speaking with Jennifer Collins, a property consultant who works with international investors in Miami. She told me, 3 years ago, I was helping clients buy waterfront condos for under $500,000. Today, those same units are going for $800,000, and they're still selling within days of hitting the market. Job creation and economic growth are fueling the surge. It's not just people moving, it's businesses. Texas and Florida have become magnet states for major employers. Austin is now being dubbed the Silicon Hills, with Tesla, Oracle, and Apple expanding their operations. Charlotte, North Carolina, has quietly become one of the largest banking hubs in America, second only to New York City. Florida's Orlando isn't just for tourists anymore. It's home to a booming healthcare and tech scene. Check this out. Job creation by sector. Texas and Florida, 2023 to 2025. And here's what matters. When jobs grow, people follow. When people move, they need homes. And when demand skyrockets, so do prices and rental yields. Affordability is relative, and investors are taking advantage. Let's talk numbers. Median home prices in Dallas are around $425,000. In Miami, a luxury condo still costs less than half of what you'd pay for a similar property in London or Sydney. Compare that to New York, where the average price of a decent apartment is now $1.3 million. Take a look at this chart. Comparative median home prices. New York, London, Sydney versus Miami, Austin, Dallas, 2025. And here's where smart investors see the opportunity, getting in on high-demand, high-growth markets, but at entry points that are still accessible, for now. I had lunch with Daniel McCarthy, a Canadian investor who's shifted 60% of his portfolio to Texas properties. He put it bluntly, why would I buy a $2 million rental in Toronto that nets me 2% when I can buy 3 properties in Dallas and get 5% yields plus appreciation? The lifestyle factor is the X factor. It's easy to overlook, but quality of life plays a massive role in driving this shift. People are tired of cold winters, high taxes, and congested cities. The Sun Belt offers warm weather year-round, larger homes, more space, and often no state income tax. A recent Pew Research study showed that 41% of Americans now prioritize lifestyle over career opportunities when choosing where to live. And this isn't just an American phenomenon. Investors from the UK and Australia are buying second homes in Florida and Texas, not just as rental properties, but as future retirement spots or vacation homes for their families. Rental demand is off the charts. Here's where things get really interesting. In Miami, 70% of residents rent. In Austin, rental demand has led to year-over-year rent increases of 7% in some neighborhoods. Check this out. Rental occupancy rates: Miami, Austin, Charlotte, 2025. And the rental yields? According to Condo Black Book, investors are seeing 4 to 6% returns on well-placed rental properties in Florida and Texas. In some niche markets, like certain suburbs of Dallas-Fort Worth, landlords are pulling in 7% or more, which is nearly unheard of in primary markets like London or Sydney. Institutional investors are moving in fast. If you're wondering whether this is just a trend among individual investors, think again. Blackstone, one of the world's largest private equity firms, has purchased over $6 billion worth of single-family rentals in the Sun Belt since 2022. Brookfield and Greystar are also making big moves, focusing on build-to-rent communities in Texas and Florida. Take a look at this chart. Investment volume by institutional investors. Sun Belt versus coastal markets, 2022 to 2025. What does this mean for you? As institutional money floods in, prices will continue to rise, and opportunities for smaller investors will shrink. Risks and how to manage them. Now, let's be clear. There are real risks you need to understand before jumping in. Water scarcity is becoming an issue in parts of Texas and Florida. Experts predict certain areas could face water restrictions within the next decade. Climate risks, including hurricanes in Florida and extreme heat in Texas, are driving insurance costs up by 42% since 2023. I asked Rebecca Nguyen, a risk management consultant for property investors in Houston, how she advises her clients. She said, "You need to look at flood maps, elevation reports, and municipal infrastructure plans before you buy. But if you do your homework, you can mitigate most of these risks and still get solid returns." The window of opportunity is closing. Here's the bottom line. The Sun Belt boom isn't a secret anymore. But as someone who's been following this space closely, I can tell you, it's not too late yet. If you're sitting in London, Sydney, New York, or Toronto wondering where to put your capital to work in 2025, this is the market to watch. But as Mark Ellis told me over coffee last month, the best deals go to those who move first. In 6 months, today's prices will look like a bargain. What smart investors are doing right now? Let's bring it all together. You've seen the numbers, you've heard what the experts are saying, and if you've made it this far, you already understand why the Sun Belt is the epicenter of real estate growth in 2025. So what are smart investors doing right now? First, they're focusing on high-growth metros like Austin, Miami, Dallas, and Charlotte, where population inflows are the strongest and job creation is accelerating. Second, they're acting fast. I can't stress this enough. The window of opportunity is closing. Once institutional investors finish snapping up prime inventory, it's going to be much harder for individual investors to find those high-yield deals. Take a look at this chart. Available housing inventory, Texas and Florida, 2020 versus 2025. You can clearly see how limited supply is tightening the market. And third, they're mitigating risk by being strategic. They're reviewing flood zone maps, analyzing infrastructure development, and focusing on neighborhoods with long-term potential, not just short-term hype. As Mark Ellis said to me last week, the biggest mistake I see investors make? Waiting too long. They overthink it, and by the time they're ready to move, the numbers no longer make sense. Recap. What you need to remember. Let's quickly recap the 3 key takeaways from today's video. Massive population growth in the Sun Belt is driving an unprecedented demand for housing, both for buyers and renters. Affordability is relative, and compared to major cities like London, New York, or Sydney, the Sun Belt still offers attractive entry points with higher yields and strong appreciation potential. Institutional money is flooding in, which means prices will continue to rise, and individual investors need to move fast before the best opportunities are gone. Why this matters to you? If you're watching this from New York, London, Toronto, or Sydney, ask yourself this. Are you prepared to diversify into markets that are growing, or are you still clinging to legacy markets that may have already peaked? Because here's the reality. You don't want to be the investor who looks back in 5 years and realizes you missed one of the biggest real estate opportunities of the decade. And I get it. Taking action in a new market can feel risky. But risk is relative. The greater risk today is doing nothing, while others capitalize on this migration and wealth shift. What's your next move? So here's my challenge to you. Drop a comment below and tell me. Which Sunbelt city are you most interested in investing in? Austin, Miami, Charlotte, or somewhere else entirely? I'm curious where you see the biggest potential. And if you found value in this video, give it a like, subscribe, and hit that notification bell so you don't miss the next deep dive. We're going to be covering specific investment strategies, neighborhood breakdowns, and case studies of real investors who are winning in today's market. Final thought. The Sunbelt boom isn't waiting around, and neither should you. As Jennifer Collins told me last month, in this market, speed beats strategy. Get in, then optimize. Thanks for watching. This is EstateScope, where we bring you actionable insights for smarter real estate investing. I'll see you in the next video.